All right, welcome back. So, it's been a few days. I didn't do I didn't do like a weekly review on the weekend after having my red week last week. Uh, every single day, red day. Uh, yeah, I'm not gonna lie. I was basically putting it off. I didn't want to do it. I didn't want to look at the week in a sense. I ended up looking at it myself and analyzing, what I did wrong and stuff like that, and that's sort of what I'm gonna look at today. But really, yeah, it wasn't a good week. And like I said, on the weekend, I didn't want to do the weekly review. I didn't want to, do a video and have to, you know, properly look at it in a sense. Uh, but I said I was going to do these videos, track the Apex account, Um, and yeah, so didn't trade Monday. I was at work on Monday and I was out and about doing stuff. Like Monday, I was on night shift, so I was out and about doing stuff. So I didn't have time to look at the charts and stuff, and I would have been only looking at it on my phone. And I haven't really set up Tradeovate. Tradeovate's kind of weird. The app that they have on their phone is kind of weird. It's not super intuitive. If I was going to trade on my phone, I'd have to get the TradingView plugin because at least TradingView makes it a little bit easier, at least on your phone anyway. Uh, but I haven't really set that up. But last night for me, so Tuesday's New York's trading session, which is this trade here that we're looking at, I was in like the office in the control room, so I was able to have the computer up next to me and watching the chart and stuff, and I had Tradeovate up. But took this trade here and got stopped out, obviously. So we're not starting off this week too well. But this is sort of why I needed to do this video is to really step back and analyze what I'm actually trying to achieve here. Um, And so yeah, so we'll get into this trade. Basically, this is the trade that I took here. So this is the 9:30. I'll just mark that here. So this is the 9:30 opening. Okay, we have the new week, or this is the previous week's new week opening up. We drop down, then we come back up, and we drop down again, and then the regular trading hours gap is way back. I'll get to these green lines in a sec. Um, the 4:14 p.m. closes. Where is it? Just there. At 72:04. So it's if I scroll back here, it's up here. All right. So the opening range gap, the regular trading hours gap, is up here, and then the 9:30 opening is here. So we retraced a little bit into this gap, and then when we come back down and I saw this move here, I was thinking, okay, we're going to go back more up into the gap, maybe to the midpoint or something like that. And that's why I took the long off of this imbalance here. So, look, unfortunately, I got stopped out. I was wrong on the direction, and as you can see, it went down, and it comes back up, but well, it comes back up after 6 p.m., like in the Asian session, like way over here. So really, I was wrong on the whole day. Like as I said, it went down lower here, and then even the PM session, it retraced in the PM session, but it never took out the AM high. So yeah, I was just completely wrong. Um, like I said, I was at work, so I didn't actually screenshot the Tradeovate chart. So, but I'll show you the report with the actual execution. The execution was 7173.25, and then obviously I lost 5 handles, 71.68.25. But this is the premise. I saw this gap, went long on this gap, saw this swing high get taken out, thought it was a market structure shift, and it wanted to go higher. Unfortunately, it didn't. So I'll show you the report. As you can see, buy price 5 micro 71.73.25, and well, the stop loss 71.68.25 for 5 handle loss 125 or 130. So, but yeah, unfortunately, this is the TraderBait. This is the actual TraderBait chart. But because it ticks over to the new day, it gets rid of the little execution, like the little arrows and stuff where it will be. But as you can see here, 49.5 basically. So, uh, yeah, another loss on the account. But do I need that? I'll just close that for now. We don't need that again. But what I'm sort of more looking at, so I'll just get rid of all this. What I'm more looking at is these, like I'm trading on the 1 minute chart. I'm trying to get a little small 5 handle move, okay? You know, a lot of the times my stop loss, as you saw with this trade here, you know, my stop loss is only 5 handles, so it's only just here. You know, it's not even at this swing low or whatever. You know, so like I said, I think it was the last video I did. With this sort of setup, like I have to be right, and I have to be right now. Like it has to move in my favor right now. You know, because 5 handles is really not that much movement. Yeah, it's really not that much movement. Like the volatility in the morning session will very easily move 5 handles. Like, I mean, you look at these, you just look at some of these, like this little run of down close candles here, this little run of up close candles. Like, I mean, you're talking that's 10 handles there, that's 12 handle, you know, 12 or more handles there. You know, this one 930 candle is 12 and a half handles. You know, the one 930 opening candle is 12 and a half handles. You know, now you could look at that and go, oh wow, that's great volatility. You know, and you know, there's setup. Yeah, there is setups for sure, and it can move in your favor very quick, but it can also move against you very quick and stop you out. So I guess that's where you got to respect the risk as well. But when I took a step back and started to analyze what I've been doing, I was listening to a Twitter space from ICT and an older space, and it's what is it? It's keys to infinite setups that yield. So if you type that in, keys to infinite setups that yield, that Twitter space, that is a brilliant Twitter space, because in there he says something that kind of resonated with me, and he said you have to have it already figured out, not only what you're looking at in the market with your setup and your, you know, stuff like that, but you have to be, or like you have to know when you can actually look at the charts, you know, because like we all have, you know, jobs and other responsibilities and family and, you know, all that sort of stuff. So you can't, or you might not be able to sit down in front of the charts every single day. You know, you might not be able to do that. So you have to figure out not only what you're doing with the charts and what your setup is and what your risk management is and all that stuff and all the psychology behind all that. You also have to be realistic of when you can actually sit down and watch price action without external distraction. So what I've come to realize is that I when I so last year, um, sort of about the middle of last year, and then well, I'm still doing it, but I switched to a CFD broker or like a forex broker. Um, my first reasoning for doing that was better risk management. So with Forex and trading CFDs like the US 500 and stuff like that, if you're in America, you can't trade CFDs apparently, but I live in Australia, so I can trade CFDs. But you can really get the lot sizes a lot more fine tuned. So I was really able to scale like exactly to the exact risk amount that I was able to, right? Because prior to that, I was trading with AMP futures on a live account, and I was trading micros, but I got to the point where, um, like it was it was still too much risk in a sense. Like I couldn't lower my risk any more than what I had. So, I had like $1,000 US in that account. Well, to be honest, I started off with $2,000, and I was trying to still get, five handles and stuff like that. But a five handle stop loss on one micro contract is $25, $5 per point. So it's $25, right? But $25, if you've only got $1,000 account, is 2.5% per trade. Okay, that's too much. Like, I mean, it's not too much in a sense, if you're, I guess, trading a profitable strategy, right? Um, and don't get me wrong, like I was winning as well, but when I was losing, I couldn't scale the risk down. Whereas with CFDs and Forex, I was able to scale down right down to 0.25% per trade. Really scaling the lot size down. So when I was winning, my equity curve was going up. I was risking about 2% per trade. That was my max risk. But then when I was losing, I could keep cutting it in half. So I'd risk 2%. Then if I took a loss, I'd risk 1%. Okay. Sometimes risking 1%, I would make that 2% back, you know, um, by getting like a 2-to-1 risk to reward, risking 1% to make 2%. And I would get that loss back. And, you know, that was great. And that was really a mindset shift when I realized, oh, okay, losing trades is a sort of whatever. Because I can risk half the amount, but make that previous loss back pretty easily. Then I went through a bit of a period of drawdown. Now, when I actually analyze what I was doing, I was going from trading Forex to trading the Nasdaq, like the Nas 100, and I had a bit of a losing streak with the Nasdaq. But the thing that saved me with my CFD like account was that I was able to scale the risk down. So I would go from 2% to 1%, then 1% to half a percent, then half a percent to 0.25%. And I would sit at 0.25% until I made back, the previous amount, and then I would go back up to zero point 0.5. Okay, then I would go up to 1, right? Then I would go from 1 to 2. So you scale back up. But what happens is when you do that, you flatten the downward curve, right? So you really focus on flattening the downward equity curve when you're in drawdown. And that really saved me. Like honestly, once I started understanding and really honing in on proper risk management, that was a big eye opener because it was like, oh, okay, like I don't have to worry about losses anymore. You know, I just do this, this, and this, cut my risk in half, and it's only until I make that previous loss back that I can go back up one, um, and it's all good. You know, it's all good. But like I said, I started to go into that period of drawdown when I was sort of switching strategies in a sense. Not so much switching strategies, but I was switching instruments. You know, I went from trading Forex, um, the major, you know, euro, pound, Aussie dollar, and I started trading the Nasdaq because I had, you know, a few winning trades in the Nasdaq, and they were bigger moves, and I made more money with them. And I was like, oh, okay, I can make more money in the Nasdaq. And you know, next thing you know, you go through a period of drawdown. But the thing that saved me and you know stopped me blowing my account or anything like that was I was able to really hone in on the risk management and flatten that drawdown curve and then slowly figure out, okay, what am I doing wrong and start to build it back up. But how this relates to this Apex account is I'm trying to go in there and I'm trying to capture a move of 5 handles in the morning session. I can't always look at the morning session. Okay, like you seen what I did last week with those videos. I was saying like, oh yeah, I got up and traded the PM session. Well, hang on, my original plan with this account was to only trade the morning session. So I've already broken rules by trading the PM session, by trading a session that I didn't say I was going to trade. So there's that. Then got to like I've got to work around the responsibilities that I have, work, etc., stuff like that. Uh, you know, so if I'm on night shift at work, it's not too bad because I can usually watch it while I'm at work, you know, in my break, or if, like I said, if I'm at the computer, I can just have it up on the other screen. Uh, if I'm on day shift though, like because of the time zones here in Australia, like the morning session is like 11:30 p.m. at night. So it's like smack bang like midnight basically. Like so I've got to either disrupt my sleep or not trade. Oh, excuse me, not trade say or do some things like I did last week, which is just get up a little bit earlier before my alarm and have a look at the PM session. But like I said, the PM session isn't in my plan, so what am I doing that? But then also I have to look at the volatility and stuff like that. And, you know, okay, 5 handles isn't that big of a move. You can get 5 handles pretty easily, but it can also come back against your stop very easily because it's only 5 handles. It's a very, you know, in a sense, it's a very tight stop loss. So this is what I was saying about how if I'm going to be, you know, if I'm going to win on a trade, I need to be right, and I need to be right then and there. It needs to go in the fair value gap, have very little drawdown, and just instantly start moving to my target. And I haven't been really selecting the proper setups that I need to be selecting. So what does this mean for the rest of this account? Well, I'm going to be honest, I'm a bit demotivated. You know, I'm on a losing streak. We're down $500 in the drawdown, but we're only risking, you know, it's like 0.25% per trade. So, you know, 5 micros it's about that 0.25, 0.26% per trade. So, you know, we haven't blown the account yet, nothing like that. But we're in drawdown and we need to slowly make a plan to get out of it. And this is where I want to go back to what was working before. Okay, and I'm going to apply what was working before in Forex and in the CFD indices into this. So really what I was doing back then was I really wasn't going below a 15-minute chart. There were trades where I would take a 5-minute sort of chart setup. Um, Also, I just want to note, like, look at last week when I was trading. Like, look at this. Okay, it's just back and forth the whole week. And it wasn't until Friday that we took out that previous Friday all-time high and went a little bit higher. Like, so last week when I was trading, I mean, look at this range that I was trying to trade in. Like, you know, you know, it's that's bad. That's that's not good at all. Um, but what I was trading in Forex, and I'll show you guys some of my winning trades from sort of the end of last year. I had a pretty good streak at the end of the last year. Um, was this kind of set up here? Okay, I'm looking at a daily high or a weekly high being taken out, and then I'm waiting for it to reverse lower and enter in on a fair value gap and then get short in that. And really, it was like I just aim for 2 to 1 and I'm out after it hits 2 to 1. So this is the kind of setup just here, all right? As you can see, in the PM session here on Monday, we take out that Sunday high. Then we go a little bit higher in Asia. Obviously, this is a 6 p.m. open. Okay, then we start to come down, and at the start of the new day, at the start of Tuesday today, we drop aggressively lower going into the London session. We have a bit of a retracement here on the end. Now, on the hourly chart, this looks a little bit nicer, you know. So if I draw this out, this is what my setup consisted of. Let me just change that. I'll just get rid of that. This is literally what I was trading in Forex and what I was waiting for. Now, Forex is it's a little bit nicer. Well, I wouldn't say nicer necessarily. Because of the pairs and stuff like that, the time zones can affect it a little bit more. So like London session is obviously a lot better for your euro and your pound and stuff like that. Aussie dollar has a move in Asia and stuff like that. So the time zones can change a little bit when it comes to Forex, but the setup and the premise behind it is the same. Okay, I'm looking for a daily or a weekly level to be taken out. Okay, I'm waiting for that market structure shift with the fair value gap. Okay, it has to have this fair value gap, right? And I'm waiting for it to be in a particular time of that day. Okay, usually, right, I'm looking for London to make the high or low. So this is what I'm saying, or it can be something like this where, I mean, on this day here, Asia technically is making the high because you count, like this Asian session here on Monday night is counted as Tuesday's daily candle. So, high in Asia, continuation, like, well, drop lower than retracement in London, and then continuation in New York. And as you can see, it goes all the way down here. But this is what I was trading, and I was having actually really good success with it in Forex. And for some reason, I moved away from it. So this is what I'm saying here. Okay, like if we just do this, okay, enter in on the fair value gap, stop above the high just here, 12 points, and the target just below this low here is 24 points, 2 to 1, exactly 2 to 1. And I was taking those trades, once or twice a week, and they were paying out, and it was great. And I was up like 10% on my account, on my live account. Now, it wasn't a great deal necessarily because I only had a few $1,000s in the account, but, regardless, this was working. And the good thing is I could just set alerts and it would just alert me when this was taking place. Okay. And when I could sit down at the London session and watch the London session, okay, like, you know, the London session's a bit better, is a bit better for me here in Australia because at the moment with the time zones, it's 4 p.m. in the afternoon till what's that? 4 till 7. That's the London session, so it's a little bit easier. You know, you can watch the London session, then you can go to bed later, and whatnot. So you're not having to stay up and disrupt sleep or you know do all this other stuff. So uh, and when I'm trading on a 15-minute or an hourly chart, like I have time. I have time to look at this. Like if I'm seeing this, like let me just go to market replay for a sec. Okay, say I need to go one more candle. Say I look at this, and this is the candle here. Okay. Oh, I need to go. Sorry, I need to go one more candle. Is it going to go one more candle? What do I have to do on that? Is it going on? But yes, so once I see this here, okay, I don't need to sit here and watch and wait for it to retrace. Okay, I've seen that. Oh, okay, here's the fair value gap. Okay, and all I can do is I can set a limit order there with my stop there and my target there, right? Or I can just set an alert and just go, you know what, alert me here. Okay. Oh, it's not going to let me do it in market replay. But I can just go set alert, and then I can go have dinner, or I can go do something else, and then I'll get an alert on my phone, and I'll go, oh, it's hit the civvy. Okay, cool. And then because it's a 15-minute or an hourly chart, like I have time. It's not like it's in it and it's out in 1 minute, and I've missed it. I've missed the best case entry. Like, if I zoom in here, I probably should draw it out to be honest. That was on an hourly chart. If I look here, it actually didn't spend too much time in here to be honest. Okay, so I've got 1, 2, 3, 4, 5, 6, and then that one there touched it there, so 7. There was 7 times in here, and even if you got somewhere close to it, I mean, it's still, it's still okay, right? If you got, close proximity. If you're getting in way down here, okay, that's, you've sort of missed it. But if you're getting in up here, and you're only a point away from the low end of the imbalance, okay, yeah, I'll take that. But like, you know what I mean? It gives you time. It gives you time. It gives you time for me to look at, okay, well, where's my stop going to be? Okay, my stop's going to be 12 points. Okay, calculate, okay, this is my account size. I'm risking 0.25%. How many micros am I trading, or how many lots am I trading? So it gives me time to, put in the lot size, put in my stop, put in my target, stuff like that. And then, usually I'll put in an alert for 12 points, like a 1-to-1. And I might take a partial at 1-to-1 or, something like that, depending on what it's looking like in the chart. Now, just so this video is not too long, I will bring this up here. So these were the sort of trades that I was taking. Now, as you can see, this was back in August. Okay, so August, as you can see, I only took one trade that week. Okay. So there was only one trade that week. There was only one trade here this week. Didn't trade any that week. One trade here this week. One trade here this week. One trade this week. Took a loss there on that one. Took a win here. So like, if we have a look at this, okay, Euro Aussie trade, after taking previous Asia and PM session buy side, had a market structure shift 15-minute SIBI, and targets were previous day low. Okay, like, I mean, this, so, you know, imbalance, buy side here, so that's PM session, that's Asia, takes it out, aggressive run here with a 15-minute gap, and partial. I mean, like 32 pips, 46 pips. You know, the first 32 pips was 1.77, 46 pips was 2.5 R. Okay, 18.5 stop loss. I only took 7.2 pips in drawdown. Right now, it took 2 hours and 30 minutes and 4 hours. Okay, it's not taken 5 minutes like ES is, right? But these were the sort of trades that I was taking, and aligning it with a target below. You like aligning it with, as you can see here, hopefully you can see okay on the video, PWL, previous week low. I've got relative equal lows here. Okay, so this would have been from this day and another day back here. So I have targets below me. It's taken out liquidity. It's rebalanced an inefficiency. Okay, we've got the displacement, we've got the entry, we're above the midnight opening price for the Power 3 concept, if you guys know that. So it's like everything's moving in my favor. So, you know, and then it plays out. And as you can see here, right, like I was risking 18.5 for a stop loss, which I believe was maybe 1% or something like that. And I'm making 1.9%, you know? So, you know, stop was moved to +2 pips after the first partial. Basically break even. Excellent trade management, excellent risk management. Boom, there you go. Let's have a look at this one, okay? This is a British pound move, okay? Perfect example here. Saw it go into this SIBI. It breaks aggressively lower through this low. I see that as a market structure shift. We have a big imbalance here. We retrace, right? I enter short here. Okay, I get my first partial below there, and then the rest gets stopped out at break even. Okay, as you can see there, my first partial is 28 pips, but the second partial of the trade is only 1 pip. Basically, it's break even. I put it to +2 pips to kind of account for the commission costs and stuff like that. You know, so let's have a look at this trade, okay? Oh, okay, and you're an Aussie trade, all right? Previous day high, takes that out. We drop down here with the 15-minute imbalance, get short there, and runs below there. And as you can see, I move, once it hits that target there, I move the stop to break even, and I take a partial off at 24 pips, and then I take my full target off at 28 pips. Okay, and yeah, literally perfect. Now, don't get me wrong, like I said, you know, it took 3 hours and 15 minutes and it took 4 hours to get to the trade, right? But I wasn't really worrying about it, to be honest. Like I just once I see the setup, I watch it, I enter. You know, there's the fair value gap. I enter short, and I just let it go. And you know, now let's have a look at this loss. Okay. Okay, British pound trade. Okay, buy side liquidity from here. We drop down in Asia. I saw that as market structure shift. Then in London over here, the next day, I enter short there, and I close the trade manually because I saw it going from my stop. Okay, all good. Like, so as you can see, I was risking 1.25% there, I think, because I closed it slightly before it hit my stop. So yeah, you know, and I put little stuff in here. Now this trade here, I did see it do this aggressive drop here because we had some news. This was actually, I do remember this. We had red folder news at 4:30 for the British pound. I didn't want to be in it. As you can see, it goes to where my target would have been, but it does actually take out that high first where my full stop loss would have been. So it would have taken me out regardless. So, yeah. So, I mean, I say it here. The trade would have hit my targets with the news, but as you can see, I would have got stopped out before it did that. All good. Okay, all good. And then let's have a look at this trade here. What's this trade? This is a euro dollar trade. Okay, relative equal highs from yesterday, takes that out, comes down, runs one more time, and then aggressively drops lower, and enter short there, and I get out there below the Asia relative equal lows just there. I mean, like this shit was working perfectly at the end of last year, and I'm not saying it doesn't work now because I've been still back testing and looking at Forex and it's still been working. But I've completely moved away from it. Like I tried to chase more money in, the Nasdaq, which I believe, yeah, there's some, as you can see here, this was a really big trade for me on this one, with some news. And to be honest, the news could have easily taken me out. But I think this kind of thing here was like, making 5.5% in one trade, right? Like this kind of thing here sort of lulled me into thinking that I could just go into the Nasdaq and, with the volatility and make more money instead of sticking to my model. So, you know what I mean? And I started implementing more stuff, and yeah, so it is what it is. But then, as you can see here, like, I take some losses, okay? I take some losses, okay? I thought, it takes out Asia low, comes up. I thought this was a microstructure shift. I enter long, and it comes back, stops me out, So, yeah. So, but the moral of this video and the moral of this story, I guess, is I got to go back and I got to look at what's working, okay? And this is what's working. And when I have a look, so this is euro. When I have a look at certain things here, okay, we take out a monthly level here, okay, we go up one more time, okay, we come down, we go up one more time again, take out a weekly level, then we come smashing down, taking out this daily low. What's that there? That is like perfect liquidity taken on a higher time frame liquidity. Then we smash down, we take out a short-term low, being a daily low. Okay, market structure shift. Okay, then we have that retracement. Okay, and then we move lower for the rest of the week. That would have been an amazing, like, one-shot, one-kill style setup, and it would have come all the way down here, and it's looking like this week's low here and this week's low here are relatively equal, and it's looking like we're going to, basically come down and target this. This is what I'm aiming for, right? So, yeah, I just wanted to make this video. I'm going to be changing up my strategy in a sense and going back to what I used to, well, going back to what worked, right? I'm trying to get down on the lower time frames on the, nitty gritty 1 minute chart and this and that, and it's obviously not working for me. I've had a completely red week last week, and I took a loss like last night, being Tuesday's session. It's just not working for me, okay? I'm getting in, it's too volatile in the morning. I'm only, trying to get 5 handles. It forces me to be right then and there. It has to move in my favor basically straight away to get the 5 handles. Otherwise I'm getting stopped out. And yeah, I need to go back to what I know works. And I had like a good few months of it working. And the only reason it stopped working was because I switched up what I was doing. So it wasn't even like my strategy on the higher time frame, the 15-minute, hourly chart. It works. I literally have data and profitable trades backing me up, telling me it works. But I am trying to change up and trade the freaking Nasdaq and trying to get down on, I'm trying to incorporate the regular trading hours gap. I'm trying to incorporate the new week opening gap. I'm trying to incorporate this and this and oh my, like I'm trying to do all these things, the shiny object syndrome, when I just need to focus on what was working. And what was working was this here, you know, weekly or daily high taken out. Watch for the displacement through the short-term low. Okay. Once it retraces, get in. Okay. Stop above the high. Right. And because it's an hourly or it's a 15-minute chart. Okay. Like if I'm entering short in here somewhere like this. Okay. Like I've got a lot of movement. Okay. That's a lot of movement that it's allowed to go against me. Right. And it's a lot of time for me to assess and go, okay, this is probably going to go for my stop. Maybe I should take something off, or I should take the whole trade off and not take my full loss. So it gives me time. And trading the higher time frame, 15-minute hourly, gives me more time to make decisions. It gives me more time to, I don't have to be, even if I get an alert on my phone or something like that, like I don't have to quickly look at it there and then and make the decision split second. Oh, I've got to get in because I'm watching a 1 minute chart. It's like, oh, okay, it's only just gone into this. I'd like to see it go a little bit more. I'll put another alert in, or, you know, I'll look at it when I get home, or I'll open the chart up on my computer when I can get a chance, and I'll have a look at it then. Like, you know what I mean? Like, it just, for me, it was so much less stressful when I was actually following my rules at the end of last year, trading Forex, because it's all the same. Like, the instruments are just, they have different characteristics, of course, and I guess a lot of people like the NASDAQ because it moves quite a lot. But I mean, that's also a double-edged sword in a sense as well. So, you got to be careful. And really, when I was when I was listening to another Twitter space by ICT as well, uh, he was saying that, he was going on about five handles and why he teaches five handles in the beginning. And he said that you can turn five handles into whatever you want it to be. And he's right. You know, like, you think that you have to have a really small stop loss and get like 10R multiple trades. Like, if you can consistently go in there and get 5 or 10 handles, like, even if it's one time per week, like, if you can consistently go in there once a week and get 10 handles, like, when you start applying money management and you start applying real, like, position sizing to that kind of setup, if you're consistent, like, holy shit, you can turn five handles. I mean, you could make 50 grand on a five handle trade with the right risk management, if you can consistently do that. Like, so you don't have to get, these 300 point, runs on the NASDAQ. Okay. Like, yeah, don't get me wrong. That's fantastic if you can get a 300 point run. But is it necessary? Not really. You just have to find something that repeats. Okay. And you can do really well with one-to-one setups. You start applying money management to it and, stuff like that. You can do really well with one-to-one setups. So, and taking partials, take a partial off at one-to-one, move stop to break even. You're free and clear in the trade. I don't give a shit what it does next. If it goes to my 2-to-1 target or 3-to-1 target, perfect. Don't care. If it comes back and stops me out, don't care. I've been paid on the trade. Like, it is what it is, you know? So, yeah. So, but yeah, that's basically like last night's trade, Tuesday's trade, what I'm doing, my sort of weekly review, what the problems were, um, sort of stuff like that. I think this video's gone on for a fair bit now. But yeah, bit more insight into my red week last week, what I'm doing to fix it, what I'm going to be doing, yeah, going forward into the future, um, and stuff like that. So I'm still going to do Apex accounts, obviously, unless I blow it up. You're going to see me if I don't, pass the account or whatnot. But I'm going to be changing it to these higher time frame like moves like this. Now the only thing with this move is like, okay, for this kind of setup, being okay, say it was this setup that I took 12 points, okay? I might only be able to trade with like 2 micros, in that sense. But that's alright. Like 2 micros, you know, that as long as it's respecting the risks that I'm outlining for the account, that's alright, you know. Two micros, and then if I get a 24-point move down here, a 2-to-1, I I see that as a win, you know. So yeah, so I guess that's pretty much it. Thanks for watching, and I will come back. I'm going to be watching like today's trading because I've got the day off today, and then I'll be watching Thursday, and then I'm working Friday, so I probably won't be able to do Friday. But then I'll come back on the weekend and I'll try and get a review in on how I went changing up and sort of going back to what worked. So, um, yeah, thanks for watching, and I'll see you in the next one.